Welcome back to Profit Path. Today, Hess markets were driven by big moves in tech, with strong gains in Alphabet and Apple, while gold eased off its highs. Stick around for full details and hit subscribe to stay on top of the markets daily. Alright, let's start with the drivers. Futures were mixed. S&P 500 and Nasdaq up slightly, but Dow futures slipped. Tech led the day, with Alphabet surging over 9% on a favorable ruling, Apple rallying nearly 4%, and Tesla up 1.4%, even as its momentum tapered later. Investors shrugged off weekly jobless claims that beat expectations. Instead, the focus remains on Friday's jobs report and the growing likelihood of a Fed rate cut. Gold pulled back about 0.3% after recent highs, as markets look ahead to Friday's jobs report and the growing likelihood of a Fed rate cut. The market is now pricing in a greater than 96% chance of a 25 basis point rate reduction at the July meeting, according to CME Group's FedWatch tool. The market is now fully pricing in a rate cut next week. Earlier today, Atlanta Fed President Raphael Bostic said that if the economy evolves as he expects, it will make sense to cut rates in July, and that was enough to push the market into positive territory. Now we're awaiting tomorrow's inflation data for more clues on the Fed's next move. In Asia, markets ticked higher across the board on dovish comments from Fed officials and soft US job data, strictly supporting rate cut expectations, which are now at over 96% probability. China's Shanghai Composite rose 0.3%, while Japan's Nikkei 225 gained 0.7%. India's Nifty also rose 0.7%, supported by the weakening rupee. European stocks are mostly in the green today as well. Germany's Xetra DAX and the UK's FTSE 100 are up around 0.3% each, while France's CAC 40 is down slightly. In the currency market, the dollar index, which measures the greenback against a basket of 6 major currencies, is hovering around 101. The euro and the pound are both up against the dollar today, each gaining about 0.2%. Oil prices are steady, with Brent crude almost unchanged and West Texas Intermediate up slightly. Both contracts are finding support as major producers, including Saudi Arabia and Russia, extend their voluntary export cuts into August. In terms of economic data releases today, US weekly jobless claims fell to 239,000, beating expectations of 248,000. This suggests that the labor market remains tight, which could keep the Fed cautious about cutting rates too aggressively. However, continuing claims, which are a good gauge of overall labor market conditions, rose to 1.3 million. Elsewhere, the market manufacturing PMIs for various countries were mostly in expansionary territory, signaling that manufacturing activity remains resilient despite slowing global growth. Turning to earnings, we had mixed results today. Second quarter earnings season is winding down, but there are still some notable reports left. Among the companies reporting today were Ford, which missed both earnings and revenue estimates. The stock is down slightly. Also, we had Uber, which beat on both counts and raised its full-year guidance. Its stock is up about 3%. The market is now consolidating. So with central banks on hold, the market is digesting recent moves and positioning itself for upcoming reports. This sideways action can be constructive, but it also increases the risk of false breakouts. With economic reports and the jobs data ahead, traders remain cautious around new buys. Tomorrow brings the latest inflation readings. CPI and core CPI will be watched closely for signs of cooling price pressures, which would support the case for a Fed rate cut. In the week ahead, we also have the release of FOMC meeting minutes, which will be scrutinized for clues on the central bank's future policy actions. Investors will also be watching earnings from big tech companies like Microsoft, Meta, and Amazon for insights into the health of the tech sector and the broader economy. To recap, tech stocks are leading, gold is easing, and markets are positioned for data-driven moves. Will tech extend gains or begin to pull back ahead of the economic reports? Drop your view in the comments, and don't forget to subscribe to Profit Path for your daily market edge. Thanks for watching. See you tomorrow.